Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. Students, in the previous class we have solved problem number 20, Anu and Tanu. Now let me move on to the next problem, problem number 21, Sanjay and Vineet, page number 81 of your question bank, page number 81. This is the last problem, friends. After completing this, we will take up a new chapter, that is first chapter, accounting for not-for-profit organization. That is the only chapter left in part 1. If you complete that, part 1 will be done, right? Yes. Now let us read the problem, we will analyze and then we will solve the problem. Sanjay and Vineet are partners sharing profits and losses in the ratio of 3:2. On 31st March 2018, their balance sheet was as follows. Refer liabilities side, capitals Sanjay and Vineet separately given. This should not be transferred to realization account because it is external. It is not external liability, it is internal liability, isn't it? Belongs to the partners. Creditors, bills payable, both should be transferred because it is external liability. Then plant, debtors, furniture, stock, investments, bills receivable, all should be transferred to realization account. And one more asset is there, cash in hand. It itself is a liquid asset, isn't it? We cannot sell it in the market, so it should not be transferred to realization account, right? Yes. Let us move on to the next part. On the above date, firm was dissolved. Sanjay was appointed to realize the assets. Sanjay was to receive 6% commission on the sale of assets except cash, and was to bear all realization expenses. So this is the case where the realization was done by some other, that is by the partner and not by the firm. Now question arises, friends, who has paid the amount? Isn't it? Sanjay was to receive 6% commission on the sale of assets except cash and was to bear all realization expenses. Sanjay is bearing all realization expenses and firm didn't pay the realization expense, isn't it? So what we have to do is, we should not give a debit to capital account. I told you in my theory class, while dealing with realization expenses, if the expenses were borne by the firm and realization was done by the firm, then normal, whatever entry we used to give in realization account to bank account and in bank account by realization account, isn't it? Expense or realization, whatever we dealt with in previous problems. Very simple. Second case is, realization was done by a partner and he will get some amount from the firm and he has to bear the realization expenses. In that case, what you have to do is, realization account debtor to concerned partner's capital account who has agreed to do the realization work. Realization account debtor to concerned partner's capital account. Instead of bank account, we will pass the entry realization account debtor to concerned partner's capital account. Which amount we will write? How much is paid by the firm? How much is agreed by the firm? That should be entered here. How much is the actual realization expenses? We are not concerned. We are concerned about how much is paid by the firm, how much was agreed to be payable by the firm. Suppose the amount of realization expenses agreed was 5,000. Actual realization expenses incurred was 4,000. In that case, what happens? We have to write here 5,000. We gave 5,000 to the partner, isn't it? So that is the cost to the firm should be debited to realization account. Remember, if the agreed amount was 5,000 and actual realization expense comes to 6,000, in that case also we should enter 5,000 only because the firm has paid 5,000. Then remaining will be the headache of the concerned partner. Whether if it is excess, then he has to bear. If there is if the expenses are less, then he has to, what he has to do? He has to get a profit. He will get a profit. It is profit for the partner, isn't it? That is what we have to do here. So we have to enter the amount which is actually paid by the firm. How much the firm has agreed or paid, that should be entered here in the realization account, and the opposite entry should be passed. That is other part of the entry should be passed in the bank account. That is capital account. Realization account entered to concerned partners capital account. So concerned partners capital account is credited by realization account. Realization account. We will give credit to concerned partners capital account. That is the only entry. If the amount is paid by the firm, even after that, then give a debit entry to bank, amount paid by the firm. Even after making payment to the partner, the expenses are borne by the firm means that should be removed from the capital account of the concerned partner. I have paid 10,000 rupees to Mr. A, suppose, to do some work, and the agreement was like he has to bear all the expenses and profit whatever derives therefrom he will enjoy. So I need not pay anything else other than that. I have to pay only 10,000 rupees and he has to do the complete work, isn't it? After doing the complete work, if I pay, in between he says, I don't have money now, you just pay now, then adjust it from my account, isn't it? Then what I will do? I will pay. Suppose 6,000 expenses, I will pay. If I pay 6,000, then what I will do? I will pass one more entry on the debit side to bank 6,000, isn't it? That is what the meaning is. Very, very simple. 3 cases. First one is realization was done by the firm and paid by the firm. Second case, realization was done by a partner and the amount was borne by the partner. Third case, realization was done by the partner and amount was paid to the partner and expenses were borne by the firm. So these are the 3 cases. Be careful. Make sure of it. Clear? Yes. So this is Sanjay has agreed to bear the realization expenses and he will have 6% commission. That is, when we sell all the assets, the total of that assets into 6%, that is the commission payable to Sanjay, right? That's all. And expenses were borne by him, no entry for that, no extra entry for that, and it was not paid by the firm. So debit entry will not come on the debit side. Clear? Let us solve the problem now. No, some part is remaining. Sanjay received 6% commission except cash and was to bear all realization expense of realization. Sanjay realized the assets as follows. It is given 90% of book value, investments, bills receivable, plant, debtors, everything is given. One of the creditors for rupees 1,300 did not claim the amount. What does that mean? Instead of receiving the entire amount due to the creditors, one creditor, that is who was supposed to receive 1,300, he told, I don't want that money. So what do you have to do? While making the payment to the creditors, deduct this amount and make the net payment. That's all. After deducting this, whatever amount remains, make that payment. That's all. So that is a benefit to the firm, right? Yes. That's all. Let us solve the problem. Right. Realization account. Realization account. Realization account. Yes, start. Debit credit, column headings, isn't it? Particulars, JF, amount in rupees on either side. Quick, do it fast. Problem number 21. Yes. To plant account 90,000. To plant account 90,000. Then debtors account 60,000. 60,000. Furniture account 32,000. Furniture account 32,000. Stock account 60,000. Stock account 60,000. Investment 70,000. Bills receivable 36,000. Bills receivable account 36,000. Then that's all. Now let us transfer liabilities by creditors account. Creditors account, how much? 80,000. Then bills payable account. Bills payable account, how much? 30,000. 30,000, right? Yes. Then let us move on to sell the assets by cash, because it is cash in hand. Assets realized. Cash in hand, not cash at bank it is. If you refer the problem, isn't it? On the asset side it is cash in hand, 32,000. So pass bank interest, plant, write the amount of realization, refer adjustment part 72,000, debtors 54,000, 54,000, furniture 18,000, 18,000, stock 54,000, 54,000, that is 60 minus 10,000, right? Minus, is it 60,000? 90% of book value, yes it is. That is stock amount was 60,000, 90% means minus 10%, right? So 6,000 minus, so it is 54,000. Then investments 76,000, investments 76,000. Why I have deducted 6,000 from stock? Because they told stock realized was 90% of the book value. That means 10% value is not received, that is depreciated. There is a decrease in the stock, isn't it? Decrease in the value of stock. So I have deducted 10%. That's all. Investment 76 and bills receivable 31. Bills receivable 31,000. That's all. Write it. 3,05,000 total. 3,05,000. Then move on to the asset side. That's a debit side. Expense realization. Sanjay has agreed so to Sanjay's capital account. We used to write cash account to cash account expense or realization earlier. Now Sanjay undertook the realization work, isn't it? So he will get the amount Sanjay's capital account. How much it costed to the firm? That is, other than cash, the amount realized into 6%. Am I correct? So 3,05,000 into 6%. That's all. 3,05,000 3,05,000 into 6 by 100, that's all. Write the amount 18,300. Expenses were very less, right? Expenses came to 4,500, doesn't matter. We are not concerned about that because firm has paid this much. So you have to enter in realization account this much amount. That is profit for the partner. 18,300 minus 4,500, it is personal profit for the partner, isn't it? So we are not concerned about that. Then what else? Liabilities paid off to cash account. Liabilities paid. Liabilities paid. What are the liabilities paid? Creditors. There is a discount, right? One creditor told I don't want that amount. So creditors 80,000 minus 1,300. 80,000 minus 1,300. So it will be how much? 78,700. 700. Bills payable. Bills payable. How much? 30,000. 30,000. 1,08,700. 1,08,700. Find out the difference. Debit side is greater, so there is a loss. 4,75,000 is the total of debit side. This side also 4,75,000. Difference is how much? 60,000. 60. 60,000 by all partners capital account. All partners capital account. Under that, who are those partners? Sanjay and Vineet, right? Sanjay and Vineet. What is the profit sharing ratio? 3:2. So 60,000 into 3 by 5. 60,000 into 3 by 5 and 60,000 into 2 by 5. 36 and 24. 36 and 24. 36 and 24. Loss on realization. Balancing figure. Balancing figure. That's all. Let us move on to the next part, that is combined capital accounts of partners. Combined capital accounts of partners. Draw the columns. Only two partners are there, so two columns on either side. Write the name Sanjay and Vineet. Write other that is particulars. Particulars Sanjay, Vineet, rupees, debit, credit. Very important. Yes, now let us start with the opening balance. By balance brought down. By balance brought down. How much it is? 150 and 120. Enter the amount. 120 and by relation account. By realization account. On the credit side, what it is? Realization, partner's capital account debtor to realization account, that is loss on realization. Here it is expenses of realization. Entry was realization account debtor to Sanjay's capital account, isn't it? Sanjay's capital account. So Sanjay's capital account is credited by realization account. So expenses 18,300, right? Yes, 18,300. Not here, only in Sanjay's column. That's all. Then loss on realization, all partners capital account debtor to realization account. So all partners capital account debtor to realization account. Realization account, loss on realization. Loss on realization. Yes, write the amount 36,000 and 24,000. 36 and 24. 24,000. Then expenses of realization paid by the firm. Here actually nothing is mentioned, we have to assume here. But in the examination, if there is a confusion, you have to give a clear working note. Here they told Sanjay realized assets as follows. Then expense of realization amounted to rupees 4,500. Then what else they gave? Sanjay was appointed to realize the assets. Sanjay was to receive 6% commission on the sale of assets except cash and was to bear all realization, expense of realization. Expense of realization. So you have to assume here that expenses were paid by the firm. If it is not, then this entry will not come. In both the cases, you have to give a clear note stating that it is assumed that expenses were borne by Sanjay. Expenses were borne by Sanjay, then no debit entry. No debit entry in capital account. And if you take like expenses were borne by Sanjay, not paid by the firm, no debit entry. And if it is paid by Sanjay, if it is paid by Sanjay, if it is paid by firm, if it is paid by firm, then debit entry should be made. You have to make one debit entry to bank account, rupees 4,500, expense or realization recovered. Expense or realization recovered. So here what we will do is, we will assume that the expenses were paid by the firm. Expenses were borne by the firm. So in that way we will treat it. Otherwise actually here nothing is mentioned regarding who has borne the realization expenses. In such a case, what we have to do? Give a working note and solve the problem, or what do you have to do? Or you have to solve assuming that the amount was not paid by the firm. But here we will assume that the expenses were borne by the firm and Sanjay was to receive the commission, isn't it? So we will give a debit entry here. Let us give a debit entry to bank, to cash account, to cash account, because all cash entries we have to pass to cash. Expenses paid by the firm. Expenses paid by the firm. Meaning is, Sanjay will get 18,300 as commission for doing, that is a realization work, undertaking the realization work, and the expense of realization were paid by the firm. Now we are recovering it from Sanjay because amount was paid to him already credited to his capital account. As we paid in cash, we will give debit entry to his capital so that his capital balance will reduce. Am I correct? We paid 18,300 Again, if you pay 4,500 to him, that means we have to deduct it from this. His capital balance we have to deduct. So, when we give debit entry, capital balance gets reduced. Correct? Are you getting me? Yes. That is how much? 4,500. 4,500. That's all. Close it. Find out the difference and make final payment. Write a note. It is assumed that the expenses were borne by the firm. Expenses were borne by, realization expenses were borne by the firm. That is the note you have, that note you should write. Clear? Now 168,300, 1,20,000. Find out the difference. 168,300. Write the same total on the other side. 1,20,000. Then difference is 127,800. 127,800 and 96,000. 96,000 to cash. Final payment. Final payment made. Balancing figure. That's all. Moving on to the last part now. Let me prepare cash account. Cash account. Correct? Yes. Cash account. Yes. Cash account always shows debit balance. To balance brought down. Draw the columns. Write column headings. Debit, credit. Particulars. JF. Amount in rupees. Correct. To balance brought down. How much? 32,000. Refer old balance sheet. 32,000. Then assets realized, isn't it? Cash account added to realization account. So, realization account is cash account debtor to realization account. Yes, on the debit side. Assets realized. Assets realized. How much? 3,05,000. Then liabilities paid, isn't it, by realization account. Liabilities paid. How much? 1,08,700. Is it correct? 1,08,700. Creditors and bills payable. Yes, it is. 1,08,700. Then, are there any other entries? No. Straight away, pass other entry, that is by Sanjay's capital account. Sanjay's capital account, final payment, and by Vineet's capital account, Vineet's capital account, final payment, isn't it? Write the amount 127,800 and 96,000. 337. 3,37,000. 37,000. That's all. Your cash account is done. But you can solve this problem in other way, that is without giving this debit entry for expenses. Assuming that amount is not paid by the firm. Amount was borne by the partner himself. By assuming that, you can solve this problem. Makes no difference for you. Clear? Then your cash, final balance will be more, and you will make more payment. That's all. Otherwise, here you will pay 4,500. Here, if this entry is not there, then here his final balance will be more, and your cash account will agree. Clear? As it is no clarity, I have assumed like this, that amount was paid by the firm. Clear? And debit entry was given. Yes. So with this, friends, your dissolution of a firm comes to an end. I'll take up not for profit organization. That's the first chapter we left, wasn't it? Compared to these chapters, we need more concentration on that chapter, because there are many confusing terms. We'll take up in the next class. Thank you for watching this video. Thank you.
Don't forget to like our video and subscribe our YouTube channel for all the updates.